Did you know that 90% of stock market investors fail to beat the average returns, and some even lose money? That's right, the odds are stacked against you. It's like trying to time the lottery, except everyone else is playing a different game with different rules. But what if I told you there's a way to flip the script and join the top 10% of successful investors? What if I told you that you don't need to be a Wall Street whiz kid or have a finance degree to make serious money in the stock market? Today, I'm diving into the secrets that the pros don't want you to know, secrets that could change the way you invest forever. These aren't some get-rich-quick schemes, no sir. I'm talking about the fundamental principles that have built generational wealth for decades. These are the principles that the wealthy whisper about at their country clubs, the strategies that they teach their children but would never share with the public. So if you're tired of watching your portfolio stagnate while the rich keep getting richer, stick around, because in this video I'm handing you the keys to the kingdom. Let's get started. Look, I get it. The stock market can seem like this giant, mysterious casino where everyone's just throwing money at random companies and hoping for the best. But here's the truth. Successful investing is built on a foundation of knowledge. It's about understanding what you're investing in and why. It's about treating your investments like you're buying a piece of a business, not just a ticker symbol on a screen. Think about it this way. Would you ever buy a house without looking inside, checking the foundation, or researching the neighborhood? Of course not. That'd be insane. Yet, countless people dump their hard-earned money into stocks without even understanding the company's business model, their competitive landscape, or their financials. They're essentially buying a house blindfolded, hoping it doesn't turn out to be a money pit. Successful investors, on the other hand, they treat research like it's their religion. They understand that knowledge is power, and that the more you know about a company, the better equipped you are to make informed investment decisions. Take Warren Buffett, for example. He's one of the wealthiest and most successful investors in history, and he's known for his meticulous research process. He reads hundreds of pages of financial statements, annual reports, and industry publications every single day. He talks to industry experts, competitors, and customers. He leaves no stone unturned. And why does he do this? Because he understands that the more information he has, the better his chances of making profitable investments. He's not just gambling on hunches or following the crowd, he's making calculated decisions based on solid research. And that's what separates the amateurs from the pros. Now, I'm not saying you need to become a financial analyst or spend every waking hour poring over spreadsheets. But you need to understand the basics of financial statements, how to read company filings, and how to evaluate a company's competitive position. There are tons of resources available online and in libraries that can teach you the fundamentals of investing. Remember, investing without research is like driving with your eyes closed. You might get lucky for a little while, but eventually you're going to crash and burn. So do your homework, understand what you're investing in, and make informed decisions based on solid research. We live in a world of instant gratification. Need a ride? Order an Uber. Want food? DoorDash it. Want to watch a movie? It's a few clicks away on Netflix. We're conditioned to expect everything now, now, now. But here's the thing about the stock market, it doesn't work that way. Investing isn't a sprint, it's a marathon. It's about long-term growth, not overnight riches. And one of the most important lessons successful investors understand is that it takes time for investments to grow. They don't panic sell at the first sign of a market downturn, and they don't chase after the latest hot stock tip. They know that true wealth is built slowly and steadily over time, by allowing their investments to compound and grow. Think of it like planting a tree. You don't plant a seed today and expect a towering oak tree tomorrow, do you? No, you nurture it, water it, and give it time to grow. You understand that it takes years, even decades, for that tree to reach its full potential. Investing is the same way. You need to give your investments time to take root, grow, and flourish. Now I know what you're thinking, but Graham, I don't have decades to wait. I want to see results now. I hear you. But the truth is, trying to time the market or chase quick profits is a recipe for disaster. It's like trying to catch lightning in a bottle. It's incredibly difficult and often leads to getting burned. The stock market is driven by emotions, by fear and greed. When the market is up, everyone's euphoric, throwing money at anything that moves, and when it crashes, everyone panics and sells at a loss. But successful investors, they ride out the storms. They know that the market moves in cycles, and that what goes down must come up. They stay focused on the long term, ignoring the short-term noise and fluctuations. Remember, Rome wasn't built in a day, and neither is a successful investment portfolio. Be patient, stay the course, and let time work its magic. Chapter 3. Title: Discipline, the unsung hero of investing success. Let's face it, staying disciplined with your investments is tough. It's like sticking to a diet or a workout routine. It takes commitment and mental fortitude. The market is constantly bombarding you with information, with news headlines screaming about the latest crash or the next big thing. It's easy to get caught up in the hype, to make impulsive decisions based on emotions rather than logic. But here's the thing. Successful investors, they're like the Navy SEALs of the financial world. They have this unwavering discipline, this ability to stick to their plan even when things get tough. They don't let their emotions get the best of them, and they don't deviate from their strategy just because the market is throwing a tantrum. Think about it. You wouldn't abandon your workout routine just because your muscles are sore, would you? No, you push through the pain, knowing that consistency is key to achieving your fitness goals. Investing is the same way. There will be times when the market tests your resolve, when you'll be tempted to sell everything and run for the hills. But it's during these times that discipline is most crucial. So how do you develop this ironclad discipline? It starts with having a solid investment plan, a roadmap that outlines your financial goals, your risk tolerance, and your investment strategy. This plan will be your North Star, guiding you through the ups and downs of the market. Once you have a plan, stick to it. Don't be tempted to chase after the latest hot stock or make impulsive decisions based on market noise. Remember, the market is driven by emotions, and if you let your emotions dictate your investment decisions, you're bound to make costly mistakes. Discipline also means staying informed about your investments but not becoming obsessed with every market fluctuation. It's about finding a balance between staying informed and not letting the market consume your every thought. Check your portfolio regularly, but don't feel the need to watch it like a hawk every minute of every day. Remember, investing is a marathon, not a sprint. And just like a marathon runner needs discipline to stay the course, you need discipline to stay focused on your long-term financial goals. Chapter 4. Title: Mistakes Happen, Why Being Right Isn't Everything. Here's a hard truth about investing. You're going to make mistakes. It's inevitable. Even the most legendary investors, the Warren Buffetts and Ray Dalios of the world, they've made their fair share of blunders. Nobody bats 1,000 in the stock market. The key is to not let those mistakes cripple you, to not let them erode your confidence or derail your long-term investment strategy. Remember, investing is a journey, not a destination. And like any journey, there will be bumps along the road. The important thing is to learn from those mistakes, to analyze what went wrong, and how you can avoid making the same mistake twice. Did you fail to do your due diligence on a company? Did you let your emotions get the best of you and make an impulsive decision? Were you overly concentrated in one particular sector or stock? Identify the root cause of the mistake, learn from it, and move on. Don't dwell on it, and don't let it paralyze you from making future investment decisions. Remember, every mistake is an opportunity for growth, a chance to refine your investment strategy and become a more informed and disciplined investor. Now, this doesn't mean you should be reckless or careless with your investments. You should always strive to make informed decisions based on solid research and analysis. But don't let the fear of making a mistake prevent you from investing altogether. Remember, the biggest mistake you can make is not investing at all. The stock market is one of the most powerful wealth-building tools available to the average person. But like any tool, you need to know how to use it effectively. So don't be afraid to make mistakes. Embrace them as learning opportunities, and use them to refine your investment strategy and become a more successful investor. Outro title: The Path to Financial Freedom. Your journey starts now. So there you have it, The secrets that the pros don't want you to know. Investing in the stock market isn't about finding a magical formula or getting lucky with the right stock. It's about developing the right mindset and using proven strategies that have stood the test of time. It's about doing your research, being patient, staying disciplined, and learning from your mistakes. If you can master these principles, you can achieve financial freedom and build a secure future for yourself and your loved ones. Remember, investing is a marathon, not a sprint. There will be ups and downs along the way, but if you stay focused on your long-term goals and stick to your plan, you will succeed. So the next time you feel like making a quick decision or chasing the latest trend, remember these principles. Stick to your plan, trust your research, and stay patient. That's the real secret to long-term success. Thanks for watching. If you've had any investing experiences, good or bad, I'd love to hear your story in the comments. Don't forget to check out my other videos on common investing myths and strategies for building long-term wealth.